Hey folks, good day to you. Hope you're doing well. So it's Friday, April 17th. I had one trade this morning and it was a loser. And yeah, so we'll go over that real quick here. The market's kind of crazy in the sense that now the tech sector is weak today and the financial sector is holding up better, whereas yesterday was the opposite. Financial was weak and tech was so strong. So that's why there's like a lack of clarity. And I agree with Dan from the Chart Guys in his video. He was saying there's a lack of clarity short term, and there is, in fact. So I attempted a trade on ROKU. I'll show you that real quick here. So basically the thesis of my trade was that we saw bulls in the morning. We had this double top at the high of the day, and look at the bear volume here. Sorry, I'm blocking it. And look at the bear volume there, and you can see this double top, and that was kind of close to some resistance levels of the previous day. If you zoom out, you can see that obviously yesterday was all bull. And yeah, so the trade didn't end up working out. I entered here just under the moving average. I was looking for a strategic entry based on this low, 124, and basically based on the 5-minute EMA. And so I entered there. I got a bit of a bounce. There was a bit of profit there to be had. And then we broke below 124 pretty aggressively, tried to get back above it, retest, and then we saw another leg down. And that's what got me out of the trade. Now, the trade itself, there's nothing wrong with the trade, obviously. What was wrong with it was that I failed to manage my risk. In fact, I basically just lost conception of my risk in the trade. I bought the 130 call, ROKU, because if we were going to see further upside and squeeze out some shorts, we were going to go to at least 130. And that was the contract expiring today that I felt had the best upside to it, obviously, in the moment. Now, I bought it at 127 on that dip. So in the moment, I thought it was a hot shot getting at a good price for that contract. And I did have some upside in it. I think it went to about 150, 160 pretty quickly. And then I ended up selling it at 50 cents on my loss. So that's more than 50% of the value of the contract. And that right there, that's the risk in trading short-term options without any kind of stop. And unfortunately, that's how it is. So I'm trading a small account. So that $77 US is approximately 12% of my account. So that's not exactly fun, and that would put me down just under 30% on the week. So I definitely need to be doing some practice on my risk management for next time. And yeah, I mean, look, lucky I'm trading a small account, because if I would be doing this kind of stuff with a big account, man, this would not be sustainable. This would be very unhealthy for me psychologically, and it's crazy, and that's trading for you, you know? And another thing I want to talk about is how technical analysis, when you do too much technical analysis and you rely too much on the chart, and you can convince yourself that there's no risk in the trade. That's the worst place to be in the state of mind, unfortunately. So looking at this trade, when I entered that contract and it went up in my favor, I didn't actually place a protective stop. The least I could have done at that moment was put in a protective stop at least somewhere below my break even. And I didn't put any protective stop, and again I paid for it because we had the bear break, which stopped out all longs, any longs who entered here on the second leg up, and then we continue downwards. And you know, that's how it is, man. If you don't use a protective stop in these markets, you're gonna get killed, especially on short-term options. So really, guys, I need to get used to using protective stops, and it's so easy, man. I'll literally show you how easy it is to freaking put a protective stop in the market. Now I'm not logged in, so let's say I do, that's it, there, right there, stop limit, that's it. All I have to do is press one key, and my order is primed and ready to go. If I want, you know what I mean? If I wanted a normal stop order, there, right? Stop, change the size, put in the price of the stop, and transmit it. Done. How complicated is it to do that on any trade that I take? And honestly, I have a bad habit of not putting in stops. And I don't understand the risk sometimes of the trades that I take, especially on these short-term expiries. Now, that's the thing. With the short-term expiry, this contract that I purchased here for 127 could have easily gone above $2 and $3. So that would have been an easy 100% winner on that trade if the trade would have followed through. But because it went in my favor and I didn't use a protective stop, I left open the downside risk. And obviously, since the contract is out of the money, right, it's a 130 call, that downside risk is higher because the option's out of the money, right? And the longer it stays out of the money, and if it has downside pressure, that contract's going to get killed very, very fast. So fortunately, that's the name of the game, guys. And I get hit in the face again for not using a protective stop. And it's tough sometimes, right? Because let's say you enter a trade, you're in one of these kind of options that move pretty fast. ROKU moves fast. You're in this trade and you can't necessarily put in a break-even stop right away as soon as you enter the trade, because obviously you can get stopped out really quickly. You don't want to put you don't need to necessarily put your stop in right away. But if the trade moves up in your favor, now you probably should put a break-even stop or a bit under your break-even to kind of limit that downside. Even if your stop, your technical stop, is still not hit in the market, you kind of should, because you're trading a risky asset, definitely put in some kind of protective stop in the market. So yeah, guys, I'm paying for it, you know. So did I show you my trade log? There it is again. So you can see the ROKU 130 call, bought it at 127, thought I was a hot shot, and then I ended up selling it at 51. So this was the psychology. It was basically this right here, break below it, see if we could get back above 124. Was this going to be just kind of a stop hunt and we go straight to a higher high? And in fact, no, we rejected 124 twice, and then bears came in, and then the bears obviously pushed that way down to grab this liquidity down here. So the tech is very weak today, and it's really crazy. And it's so important to stay aware of this stuff when you're trading. You know, the NASDAQ is weaker. Everybody got used to the NASDAQ being strong, and now the NASDAQ is weak when everybody's expecting it to be strong. So what can we say, guys? We work every day to get better. So I'm going to be done for today, guys. I'm going to be done for the week. I'm going to go over my trades this weekend. Definitely do some of my homework. So, you know, I'm not green. I'm not profitable. I'm not a profitable trader. I never said anywhere in this video that I was a profitable trader. But maybe I'm smart, but I'm not profitable. That's for sure. All right, guys. So I wish you a great day. Enjoy your weekends, okay? Do your homework and take care. Bye.